There's no such thing as the best home loan, only the best home loan for your situation. So in this video, we're going to cover the differences between VA, conventional, USDA, and FHA. So whether you're a first-time home buyer or a veteran or you want to buy in a rural area, you'll know what fits you the best. So let's hop right in. Okay, let's start with conventional. A lot of people are like, I want conventional, but don't really know the reasons why they want conventional. Well, here's the biggest reason. If you put 20% down or more, you don't have mortgage insurance. And mortgage insurance is a premium that you pay monthly when you put less than 20% down. But guess what? If you put less than 20% down with conventional, you do have mortgage insurance, okay? You will have mortgage insurance. But the good news is that once you hit 78% loan to value from your original loan amount, the mortgage insurance goes away. So that's one of the benefits of getting conventional. Now, for a conventional loan, you do need a minimum of a 620 credit score, okay? Minimum 620 credit score. In some instances, if you have great credit history, but you haven't utilized credit in a long time, then yeah, conventional doesn't matter. You might have no scores, and conventional will still take it, and that's Fannie Mae and Freddie Mac, okay? So conventional, 620 minimum credit score, okay? You can go all the way down to 3% down if you're a first-time home buyer. Ooh, that's pretty cool. For the second time, not second time use, but if you're buying a house again, 5% down. But if you're a first-time home buyer, 3% down is low, but it does have mortgage insurance. So know that, guys. Let's get to the next animal, FHA. So a lot of people are like, I want FHA, but don't know why they want FHA. Well, FHA will allow you to go down to a 580 credit score, and in some cases down to a 500 credit score, okay? But if you want the minimum down payment, 580 or better is what you're going to need. Now, a lot of people have a 590 credit score, and they're like, but I want conventional. Well, the reason why their loan officer chose FHA is because of the credit score. So now understand this, the different programs have different benefits to them. So depending on where you stand financially, you might have to go FHA, or you might be in a better deal going conventional. Usually your loan officer will find that out for you. But let's get to the down payment, 3.5% on an FHA. So as long as you have 580 or better, you're putting 3.5% down minimum. Okay, that's a pretty darn good deal. Now, let's say you do have a 550 credit score. FHA will take it as long as your down payment is higher. Usually the amount they're looking for is about 10%, okay? So if you have less than a 580 credit score and a 10% or more down payment, you got to take it to the dance. Now, history is a big deal, guys, because we're talking about lower end credit scores, 580, 550. So as long as your history is good, you got a shot, guys. Not a guarantee, you got a shot. So what I mean by history is, have you made your payments on time for the past 12 months? Have you made your payments on time for the past 24 months in some instances? So that's having good history. We've all had challenges, guys. Don't feel bad if you have late payments from back in the day, from COVID days or whatever it may be. So we've all had our challenges. Don't worry about the past. Just maintain a good history moving forward when it comes to the last 12 months, and if you can, the last 24 months. Okay, that'll equal to an approval. Okay, that your percentage or chances of getting approved go up if you have great history. Okay, let's get to our next beast, VA. If you're a military veteran, if you have an honorable discharge, or you're currently serving and have enough time served, you can get a VA loan for zero down. Now, VA does not have mortgage insurance either. Because remember, I said if you're putting less than 20% down, you have mortgage insurance. But in the case of VA, you don't. You may have one fee called a funding fee, and that's added to the total loan amount. So you're not paying it a monthly premium. It's just added to the total loan amount. But if you have service connection disability, that number can go to zero. Okay, and that's for those that are already out of the military. Usually when you're already in the military, you don't have a disability because you're still working there. So in that case, you will have a funding fee. It's a one-time fee, guys. Nothing you have to worry about. But the loan officer takes care of that. You don't have to educate us, at least your good loan officers. You don't have to educate on what they can and can't do. We're automatically going to take care of you and make sure you're in the best position. So VA, zero down, no mortgage insurance, and incredible interest rates, by the way. So VA, depending, probably the best loan in the market, but it's only for our men and women of service, guys. So if you have an honorable discharge or currently serving with enough time in the military, you can take advantage of this. Now let's get to our fourth one, USDA. This animal is a little different. This one's made specifically for agricultural. And you have to be in the zone of the map in order to get a loan this type. So what that means is you go to USA.gov, USDA.gov, go to the map, and it'll let you know the areas of where USDA is allowable. And the benefit to this home loan, 0 down. Minimum credit score, 580. Does it have mortgage insurance? Yes, but it's called something different. So don't let it fool you, okay? Remember, because I told you, if you're putting less than 20% down, other than a VA loan, you're gonna have some sort of mortgage insurance, okay? So once you go to the map, figure out where you wanna live. If it's on the map and it shows you where you can get, where USDA is eligible, if you wanna move in that area, you can get a USDA loan. You can. Now, does that mean that just because you have a 580 credit score and you have everything else to meet the guidelines that you're going to get approved? No, these are the minimums, guys. So if you have 700 credit scores, 800 credit scores, it's the probability of you getting approved skyrockets. When you're on the lower end of the credit scores, there's usually a reason for that, okay? Now, if we do run into one of these challenges, we'll help you figure out exactly what's stopping you from getting approved. We'll teach you how to solve it. We'll get over that hurdle. You'll still be able to get a home loan. Those that are serious about getting houses usually put in the work that's necessary to get the house. So let me recap really fast for you guys, okay? Because we don't want to go long on these videos. We want to give you the truth, the data. And then if you're interested, give us a call. Our phone number is in our profile, it's in our banner, it's in the description. We're not hiding, we're not secret agents. You can get a hold of us, call us, text us. Now, quick recap. Conventional, minimum 620 down, minimum 3% down for a first-time home buyer. Everyone else is 5% or more. Once you get 20% down or higher, no mortgage insurance. FHA, minimum 580 credit score for the minimum of 3.5% down, okay? Anything below a 580, you do have a larger down payment, but we can go all the way down to 500 credit score with 10% or more down. Typically, it changes for everybody. It's a little different for everybody else. Okay, let's go to VA. Minimum credit score. I didn't even touch this, but VA really doesn't have a minimum credit score. Okay, it goes off a back end residual calculation, which is the biggest driver of the VA loan. So don't let credit, stop you when it comes to VA. 0 down, no mortgage insurance, just a funding fee, okay? And then we have USDA. 0 down also has to be in the USDA zone on the map, okay? Remember that. Minimum 580 credit score, and it does have its own form of mortgage insurance. Now, if you have any questions about this, give us a call. We will have one-on-one conversations. Doesn't cost you anything but a little bit of time, okay? And as always, I recommend get pre-qualified, okay? If you're serious about getting a house, get pre-approved, but having a conversation, getting pre-qualified will let you know exactly where you stand. It'll let you know if you need more time at work. It'll let you know if you need a cosigner. It'll let you know if you need to work on your credit. It'll let you know what down payment amount you need or if you need to save more money. It'll answer all your questions, get you on the right path. I hope this helps. Give us a call if you need help. You guys have a great day.